All right, good morning, San Diego. Hope you're gearing up for a great day at Comic-Con. We've got a great show lined up for you today. Great experts, great guests. My goal every show is to educate you, to empower you, and to engage you. Here comes another episode of The American Dream. I go to battle for you every day to combat the nonsense in the mainstream media. They're more interested in sound bites and sensationalism. I'm interested in the truth and being your consumer advocate. My ultimate goal is to help you win in any marketplace, and I'm bringing an edge in the real estate and financial game. My name is Craig Sewing, and this is The American Dream. All right, welcome. Thanks for tuning in again for another episode of The American Dream. Great week of radio shows where we discussed a lot of the topics you're going to hear about today. What's happening in the financial market. We continue to beat the drum of what happens with a 10% correction that's overdue in the economy. Real estate numbers are coming in on both sides. We're going to bring in some experts to talk about that. A lot of great information. Again, we discussed this all on the radio show this week, and we're going to bring it all to you here today. Also, I encourage you, if you haven't yet, we have a new Pacific Magazine piece that is hit the streets here in San Diego. The last month, interesting cover, but the last month we talked about the VA scandal. This month, we're going to be talking about the immigration issues. And the next month, we're going to be talking about minimum wage. So you can find this, again, only in California. You get a cover like that. But you can find us anywhere, restaurants, grocery stores, gyms, anything like that. And, of course, any questions you have with anything we discuss, whether it's radio, you see us in print, social media, or anything here today, never forget this resource. We want to make sure that if you need anything, that we're not just bringing opinions on the show, but also being that resource for you. Visit me online at craigsewing.com. What you'll find there is that there's a contact form. Any message, whether you're commenting on the show, asking questions, you want to get introduced to one of our advisors, we are happy to help you in any way we can. So it's craigsewing.com, my first and last name. All right, let's look at real quick what happened in the market this week. There's some big reports that happened. We saw that consumer price index came in here. That's a measure of inflation. Also existing home sales, jobless claims, and durable goods. This all happened this week. We're going to comment on all the reports, what it did to the market, and really what you need to know when we talk about things like your financial plan. I always say there's the economy out there, and then there's that one in between your own ears. And that's where a lot of this volatility, we want to protect you from the downside. We want to help you ride the upside, but also things like avoiding taxation, fees that eat up your 401k. These are things you can control. The economy you can't. So we're going to get into that. We're going to bring in our financial analyst, David Reyes, with the Reyes Report. David Reyes, welcome back to the show.
How you doing?
Also, we got a special guest in Don Meredith, Tactical Income for Life. So we'll do a little bit of a financial panel here. So there's definitely no shortage of news with the immigration stories, minimum wage. Certainly, we still have the VA scandal, a lot of things happening in geopolitics. Now, the crazy thing is a lot of these things actually affect the market. So real quick, if you could give us a recap, David, what the market look like this week?
Well, it's been, as I talked about before, Craig, earnings. Earnings, remember we talked a couple weeks ago, it's earnings season.
Right, and how's it done?
Earnings have actually been really good.
So that's a good thing?
Surprisingly, not surprisingly. They've been on both sides, both on the earnings side and both on the revenue side, which is the key. Are we actually creating more revenue? It's still below estimates, so the market's still ahead of itself.
Okay.
So earnings still have to play a little catch up. I'm still concerned as we move closer to midterm election season. I've talked a lot about. I think we're going to see a lot more volatility in September, and so that's something I'm concerned about. As you mentioned earlier, we've not had that correction. We have not had a correction of 10% or more in going on 33 months now.
Oh, it's 33.
Now it's almost 30. It's almost 33. So
off of the 18 average.
Yeah,
right?
the 18 average post World War II. So, that doesn't mean it's going to happen. It just means...
It's got to at some point, right?
Well, at some point it's going to happen, but timing markets is very difficult. Timing tops and bottoms. So I think, though, as we get closer to election season, I think that's definitely going to cause a little bit more jitters. And, of course, we have all the geopolitical issues that the market's just shrugged off. Quite honestly. I mean, completely.
It's been interesting to watch how they've shrugged it off, but I think it's because a lot of these things that might create that uncertainty, a lot of times they're offset by things that show that the story wasn't that big of an issue. You've seen that in certain things, at least for the last 6 to 8 months. And then also we got to look at the things you can do, which Don can help us comment on with tactical income, some of the strategies you guys are helping people with. But you mentioned politics. There's a story that I picked up on from CNBC this week about Dodd-Frank. So I want to check out this clip and come back to it here.
This is an important day in the history of this legislation. I just want to quote one characterization of it here for you and get you to respond. As one investor put it to me, I would characterize it as a hasty, ill-conceived, and ill-executed piece of legislation that has been extraordinarily costly in dollar terms while adding enormous complexity to the financial system with very little positive benefit. Chairman Dodd, I would just like to hear what you have to say in response.
Well, that's first a rather remarkable statement to make. Just to remind people, because we do have short memories in all of this, we had some $12 trillion of national wealth was lost, much of it never to be recovered. Millions of jobs gone, 5 million homes foreclosed. 2 of our largest investment banks failed. 1 was merged. 2 became banks. Commercial banks were merged. Billions of dollars had to be used to bail them out.
Well, he's certainly making a lot of great observations. What he forgets to point out is bumbling Barney Frank actually helped contribute to some of the things that happened in the housing market. Now, I'm a consumer advocate. I want to help anyone, whether you're upper class, lower class, you're to the left or the right, Democrat, Republican, conservative, liberal, doesn't really matter to me. My job is to help as many people as we can. And so when I hear things like Dodd-Frank that are meant to protect the consumer, my knee-jerk reaction is, I'm in support of things like that until you realize it's politicians in the spirit of Comic-Con. It's like they want to fly in with Superman S's on their chest, but these are the guys who actually helped contribute to the problem. Go ahead, Don.
Forbes just did a great article going back with mortgages in our country's history to 1934, the first meddling of the government in mortgages.
Okay.
Fast forward to 1992, where they came out with what? The Affordable Care Act, the Affordable Housing Act.
Right.
36% of mortgages at that time were now what we call subprime. That expanded in 2008 to 56%. Did the government cause that or Wall Street?
Yeah.
And, as you pointed out, Barney Frank, Google 2003 CNBC interview. He's banging the desk saying we need to expand mortgages.
We played that clip about 2 months ago on the show. No, there's no doubt about it. When I get asked all the time from our website what I think about the housing crash, whose fault it was, and I really say collectively as a country we can all take blame. I think that Wall Street can take some blame, Washington can take some blame, but look, we're being negligent to give the consumer a free pass as well. I don't remember anyone taking out 125% cash out refinance and complaining about the money they got. So you could find a lot of places to blame, but the retroactive way to try and solve this problem was something like a Dodd-Frank. Now that's housing amongst other things, but it definitely squeezes some of the good guys in the industry. What are you seeing from you and the advice you can give? How does it affect you on the financial sector?
Well, I think there's no doubt the pendulum always swings too far.
Yeah.
That's what happens. Our country is notorious for not being proactive. We're reactive on everything, right?
Overreactive.
It's like buying insurance after you get in a car accident. Okay.
Yep.
And so that's what's happened here with Dodd-Frank.
Yep.
And the ramifications from you to me in America and your viewers is that really it's crimped because of all of this legislation that's being stacked upon legislation, the Consumer Protection Agency, Dodd-Frank, I can go on and on, is that what happens is really crimped lending because banks really have higher reserve requirements. There's all kinds of issues.
It's crushed some really
and the biggest is small
lenders,
business lending is basically at 30% of levels it was in 2006, 2007.
So you mentioned,
and that drives our economy. It's small
absolutely.
business.
You mentioned the market shrugging off a lot of things happening geopolitically, and there are a lot of things happening now across the country. And when we think about things like the illegal immigration problem we have right now, I mean, thank God we live in the greatest city in the greatest country on the planet, that we have people wanting to get in here. Because when you watch the news for 5 minutes, you see how crazy it is on other parts of the world. But a lot of these things can affect our market. I want to pull up another clip here, David. I'd love to get your comments on where you had mentioned the market shrugging off some of these things.
So you do have this unique perspective of advising presidents and the White House on geopolitical international issues and also being an investment manager. Do you think that the equity markets are underestimating the potential threats and contagion of these geopolitical risks in Russia and in the Middle East?
Well, I'm not sure they're underestimating them, but I think that they're being overcome by bigger forces in the market, which is the central banks. But it's very clear that the geopolitical situation is a mess. It's hard to say anything constructive about the Israeli-Gaza situation. Russia, Ukraine is a mess. The China Sea, the growing conflict between China, Japan, and China, Philippines, and China, Vietnam. So this is a very difficult period we're going into, and it is surprising that prices have been going up, today notwithstanding, and volatility has been so low.
Guys, what do you think? Sorry, David.
Well, what he's saying is some things that what's been overcome is earnings, quite frankly.
Okay.
If earnings were not beating, about 70% of companies beating, you would not see the market still holding on right now. So really, you've got some economic data that's positive, some negative, but earnings is really driving this. If you saw poor earnings plus these headline risks, you would see the market correct. So it's like this battle. It doesn't mean the market's not a little extended. It's probably very overextended. And I think the only thing right now that'll take it down is what I talked about, the political landscape for midterm election cycles, which go down an average of 17% during midterms.
Yep.
And or a combination of a flare-up that's more serious.
Yep.
Right now, it's just been kind of little brush fires.
Well, let's get into some of the advice.
Yeah.
Don, I know that you help people with tactical income. David, you're helping people doing a lot of reviews of their retirement plan, looking out for things like those corrections, again, the economy in between your own ears. What are the things you can control versus some of these things you can opinionate on, but you can't necessarily control them? What are some strategies that work right now?
Well, to David's point is you have to pay attention to the market is really amazingly resistant right now, showing a great deal of strength. And we had one or two down days with that Ukraine issue and the airliner issue, which was amazing to me. So the strength that it's showing, can lure people in a little bit more. It doesn't mean just because the market's acting well, it doesn't mean not to be cautious.
Well, what is the strength? Is it like Mark McGwire's strength in the 90s when he's breaking home run records? When you parallel that to the stimulus that's been injected in QE3?
It's amazing when you consider that you have program traders that are just pouncing on any weakness, trying to drive that market down, and to see this market continue to rally like it is that's a lot of strength, and it has my attention. But there has to be a caution built in. You can't go to sleep with this kind of
So from each of you, I'd like to
action.
just get a good strategy that you think works in this market. We're hitting close to all-time highs. Again, we're now 33 months into where we haven't seen a 10% correction. You have a lot of geopolitical concerns. What's a good takeaway for our audience today?
Well, I think, as David would, I'm sure, say, we have a lot of clients, older clients, looking for yield. And you have an interest rate environment that's really tough right now. Muni bonds, treasury bonds, way down. I would say throw in some real estate, throw in some real estate trusts, 6.5% tax advantage yield. Look at oil and gas, look at energy. There's some other things you can do to beef up that return that are tax advantage as well.
Got it. David, what do you think?
Two things, and I agree with him on the real estate side. We talk about non-correlated assets to the market. Mm-hmm. A second thing that people really overlook and most people are not that familiar with is really you can buy, you buy insurance for your car, right, Craig?
Yep.
You buy it for your home every year, right?
Yep.
And there's insurance you can buy for your portfolio. And people don't realize that, and so I educate a lot of our clients. A lot of our clients have, and we don't have time to get into this today.
Sure.
But people are interested; they can contact me. But the point is that I would be very cautious, especially if you're long the market. And there's ways to protect that upside gain that you have. There's some more sophisticated ways, and there's some less sophisticated ways. But like Don was saying, you definitely want to be careful right now. But at least with some of the strategies that we have, it allows you to stay in the market, but have some protection in case your house does get destroyed.
Thanks,
or your
guys.
stocks.
Great financial panel here today. David Reyes, Don Meredith. You can find them online. Tactical Income for Life, ReyesPlan.com. I encourage you to get a review. Look, there's no shortage of news right now, and that confusion, it creates uncertainty in the market, but can also create uncertainty for you and your family. The best thing you can do is get tailored advice. Well, I mean, whether it's your real estate, your retirement, just your investments, your savings, whatever it is, get a second review. And David and Don can help you do this. If you visit us online, easy way to contact me directly and facilitate a plan for you is craigsewing.com, my first and last name. Happy to help you in any way I can. You can also follow us on Twitter and Facebook and all that fun stuff. So make sure you visit us there. Great information from our guys here. All right, coming up, we're going to dive into some of these political issues. We're going to get a little bit more opinionated here. I'm going to bring in the political professor, Rick Epps. You see him on TV everywhere. And also, we're going to dive into the real estate market. Got some mixed reports this week. Going to bring in our real estate elite. Stick around. You're watching The American Dream. Back in just a moment.